Good morning, everybody. Today is, of course, December the 4th. This is Thursday. And real quick, we'll look up here at the S&P 500. Well, this is SPY. SPY is, of course, the ETF based on our S&P 500. You can see we closed at 207.89. Let's scroll down here to the minute chart to look at pre-market trading. You see we're at 207.93. It's fluctuated a lot since pre-market trading began this morning. Initially, we were up almost 8 points. And the reason is because the ECB, the European Central Bank, overnight came out and announced a flat rate, not increase, sustaining the same rate that they have. So they left rates unchanged overnight. And initially, the markets seemed to like that, and we moved up significantly. Well, that's since drifted back down, and we have actually looked to open flat. We'll see how that holds because we got about, roughly 30 minutes before the market opens as I'm recording this. So we'll see how that happens, but it looks like we're going to open flat. Looking over here at our daily chart on the S&P 500, you'll remember yesterday I said we really needed it to move down or sideways, not move up much. And in the last hour of the day, it did move up significantly. And I have no explanation for that other than the fact that they just want to move it up. The only thing that concerns me this is because they moved it up. I mean, look how far away we are from our 50-day moving average. Here's our 50-day moving exponential average. You could see that's nearly 60 points away. That's a long ways. So we don't need any more up movement because the further we get away from that, the harder the collapse is going to be if and when it happens, and it will happen. So we're just going to, again, continue to watch and see what transpires for that. Now, speaking of the last hour of the day, let's look over here at IBM and look what happened. This indeed happened in the last hour of the day. So we drew a second set of trend lines on yesterday, and I told you it had this megaphone, I think it's called a megaphone topper, this descending wedge that was happening, this consolidation that was beginning to take place over the last week or so. And I told you if it continued, that usually always breaks down. What happened yesterday? Well, let's roll over to our minute chart. Here's our minute chart. Let me back out till we can look at the whole day. You can see the times there at the bottom. Back out a little bit more. Come on, Internet. You can do it. You can do it. Okay, so we opened up, and in the very beginning of the day, we went up, okay? But then we began to kind of fall all day long. And then the last hour of the day, coinciding with the same move on the S&P 500, remember the IBM stock is in the S&P 500. It's not very heavily weighted, but it's there. When the S&P 500 moved up, this moved up too. Now, there's two ways you could take that. You could say, well, that's in the same bundle as the S&P 500, and the people that were controlling that just drug IBM along. That's one analysis that we can take away. The second analysis is you can say, we're in control of IBM. We're a big boy, and we see this consolidation pattern that we've allowed to happen. And if we allow that to continue, it's going to break down and break out of our control, and we really don't want it to go down any lower than it is already. So let's give it a run up. And that, weighted on the S&P 500, helped to bring the S&P 500 back up. It's one of those two scenarios. Which one? I have no idea. But we're now out of the danger zone of consolidation for IBM. Let me roll back over to the daily chart real quick. And zoom back in so we can see it a bit closer. I apologize for my internet's being really slow. The internet's. So we are back into our previous trend range. In fact, we went above my previous trend line. So we'll see how that holds on a really good up run. We would expect some profit taking on a move like that. So hopefully it moves back down and stays within that trend range. We want it to stay in the trend range because I can trade off of that if it stays in the trend range. It's when it breaks out of a trend that you have to scratch your head and move on to something else. But remember, this is an ongoing exercise in trending and seeing patterns develop and trying to predict and make trades off of that. So that's where we are in IBM. We're back out of the danger zone. We're back out of that consolidation. We're back to our original trend that we drew. Let's see if we can maintain it. So that's all I have. Again, I'm going to sit on the sidelines, I'm not making any kind of predictions on the market at all. I'm hoping that we move sideways because we need to bring that 50-day moving average up. The longer we stay up at those high levels and so far away from the 50-day moving average, the more disastrous that becomes when we begin to move back to it, because it acts like gravity, and when it gives, it just collapses. So if we can get that 50-day moving average to move up with some sideways movement and get closer, that would be great. That would also allow us to redraw our trend lines on our S&P 500, which we've yet to redo because we don't have any new kind of patterns develop, but we're getting closer. So talk to you tomorrow. Peace out. Bye.